Oil remains under pressure following another round of sell-off. Yesterday, the ruble retreated against the US dollar by 2.5%, posting the worst performance on Forex due to the slump in oil prices and worsening risk appetite. On Thursday, the background is neutral for the ruble and is trying to regain ground. The tax payment period in Russia and interventions of Russia's central bank will most likely support the ruble. The new OPEC Plus deal on production cuts has boosted oil market sentiment, but not for long. Even if participants of the agreement are strongly committed to reducing the output, oil quotes may still tumble to the lowest levels. Both oil benchmarks are at risk of stepping back to $20 per barrel in the first quarter. Oil futures curve may become even steeper as oil storages are getting full. Besides, the U.S. Energy Information Administration reported the biggest weekly increase in crude inventories. In addition, the International Energy Agency has forecasted oil demand to drop by a record 9.3 million barrels per day in 2020. On Wednesday, Brent crude lost more than 6% of its value, while today oil quotes are on track to recovery. To the early trade, Brent oil futures edged higher to settle at $28.13 per barrel. West Texas Intermediate crude was following similar trajectory and was last seen trading at $20.29 per barrel. Today, investors will focus on the monthly oil market review from OPEC. The forecast is unlikely to be encouraging for traders. OPEC is expected to cut its outlook for global oil demand following the forecast presented earlier by the International Energy Agency. This means that markets will soon see the deepest oil demand collapse in history. Yesterday, oil prices fell slightly, thus pushing the ruble down. The Russian currency tested the mark of 75 against the US dollar. The ruble also eased due to the overall tendency of risk aversion. Besides, the auctions on federal loan bonds did not provide any significant support to the national currency. It seems that mostly local investors took interest in bonds, while foreign players didn't show any activity. Today, the ruble is winning back its early losses. The dollar-ruble pair opened the day moving notably lower and reached the level of 74.27 in the mid-trade. The current pullback of the ruble is not critical, and we still need to focus on the levels of 74 and 75.70. If the US dollar retreats below the mark of 74, the ruble will continue to rise and may even return to the level of 72.72. However, there is still a risk that the worsening situation in the stock and energy markets will weigh on the ruble. In this case, the dollar-ruble pair may jump above 75.70 and go further to 78.00. The ongoing period of corporate reports in the United States may become a risk factor for the ruble. In addition, data on initial jobless claims in the US and China's GDP report may deteriorate investors' sentiment. The instability in the energy market may put additional pressure on the Russian currency. That's all for now. We wish you profitable deals. See you in a couple of hours.